Hi everyone, my name is Lawi, Managing Director, Africa for Impacc. Impacc is a philanthropic VC. We invest in stellar founders who have potential scalable businesses, their biggest handle being investments. And that's why we're coming to inject capital into these businesses so that they're able to grow and be able to unlock the follow-on commercial funding. I'm also the Vice Chair of ASAC being Association of Startup and SME Enablers of Kenya. I call myself a child of ecosystem, because I started my first job very early on in the journey in the startup ecosystem. Actually, we didn't even know we were startup ecosystem then. In this case, being GrowthAfrica, my first job that I got, we were supporting entrepreneurs to start out business in East Africa. And since then to date, I have been working with entrepreneurs, started with facilitating how they start their business, how they build their structures for them to grow and raise further funding. Our funding ticket size is 50 to 150, and in exchange of equity as direct funding or investments. So that is one of the instruments that we use for funding. We also very keen to explore convertible notes, where, for example, a business will be needing a certain amount of money for a period of time, and they are able to repay it back, can convert as a loan to be repaid back, or can convert as shares in the organization or in the company. The other form of tools of investment that we are keen to explore is revenue share model, where you inject capital and in exchange of when the trigger happens of repayment, that can convert to repayment in terms of what was injected in the company as part of the revenue generating, and at the end of the period we get back the surety, of course, will be the shares held in guarantee of the capital that have been injected in the company. Being philanthropic means that we don't have return on our investments, meaning that when we inject money, we are not allowed to take any margins on top of what we have injected. So you find most of the time when entrepreneurs start paying up what we injected, it's only the amount of the money that we injected in the capital. The only thing that changes is at the point of us injecting capital, this is where the business was. If it's in 5 years, where will the business be? And we will require the same kind of repayment back to us at the valuation of that time. So we are not in the business of ROI, but we're in the business of making sure the business grows and we're able to recoup our investment so that we can put it in other upcoming businesses. Also keen to note is that we have some small revolving fund. This revolving fund is set aside for the businesses that are within our portfolio. For example, if you're in manufacturing, you have a very long turnaround time of paying customers. So, and how do you keep going? How do we keep them going when they don't have money to keep the day-to-day business running? So, and with the revolving fund, we are able to advance quick cash to this business within the portfolio. With already our portfolio companies, we have already injected capital, so we want to keep them running as much as we can, and that helps a lot with the day-to-day running of the business. I think one of the things I miss and I look out for, and as an organization we are very keen to spot, is how authentic are you as an entrepreneur? Because the more vulnerable you are, the more authentic you are. And you're not telling me a story that I want to hear, and you're telling me a story of who you are and what you're doing, then it sets you apart from everybody else, because everybody else are just putting out a pitch. If you come out very authentically and vulnerable and just showing who you are and letting us know that you're not perfect, and you're just looking for a partner who you can walk along and help you to grow to the next level. For us, that is very keen, and I think it sets someone apart from everybody else.